Right, guys, let me quickly do this recording for you. I've recorded this because I didn't have the recording on that day. Right. So this is an example question for corporation tax, a good practice question, right? So we've been asked to calculate the taxable total profit. Remember, question did not ask us to calculate the corporation tax liability. They're simply asking us to work out taxable total profit. So what is the taxable total profit? Let me scroll. You can see this here. I'm so sorry, I'm using my desktop, it's quite large. Right, so you can see these are the taxable total profit. This is the layout. This is the layout for the corporation tax, taxable total profit, right? We need to have the trading profit first. Then we need to find the property income. Then we have the non-NTL, non-trade relationship, non-trade loan relationship interest income. That means these are interest income, but not trade related. Then we also have chargeable gain. So these are the four different sources of income for the company, right? Trading profit is one, property income is the other, non-trade interest income, chargeable gain. So these three items, let me highlight them in a different color. So finding these three items are not, it's straightforward. We will be getting these numbers straight from the question, right? And once you find them, then with the trading profit, we would arrive at the total profit. From that, we will deduct the qualifying charitable donations. We would arrive at the taxable total profit, right? But then finding the first number, which is the trading profit, is where that we have to do additional working, right? So that would be additional working here. Let me first read the question and fill things which are easier for us to do first, and then I'll do the trading profit thereafter. Right, for the purpose of calculating the taxable total profit, they have given us a profit and loss account. So they said this profit and loss account is based on IFRS 18, right? Based on IFRS 18 is where the profit and loss account has been prepared. So these data has been given to us simply for that we can find the first source of income, which is the trading profit, right? For us to find the trading profit is what this has been given. Right, these been given so that we can identify and find the trading profit, right? So accounting profit has been given, so we need to do the necessary adjustments to find the trading profit. Remember I said we just first do the other three different income related to taxable total profit, and then we'll come back to the trading profit at the end, right? So they have given us the profit and loss account, and here they have given us certain adjustments. They said the other operating income, 30,000, represents a profit on disposal of a factory. So that means they're talking about this other operating income. This 30,000, which is included as part of the trading profit, now it is being told it is not trading profit. It's simply because you sold a machine. Sorry, you sold a factory. Selling factory is not the main business activity of this organization, company. Therefore, it can't be part of your trading profit. So we need to do the adjustment for the first note when we do the trading profit adjustments. We'll come back to that in a minute, right? But then the second item which is being given to us here, right? They said here the next second item which they have given to us here. This is a gain, right, on disposal. I hope you remember when we did the corporation tax, we talk about the index gain, right? Index is related to the inflation. Companies are given allowances for the inflation, right? Increase in the prices. And but it was frozen from 2017 onwards, right? But it's very simple. We don't have to do any calculations. They have given us, examiner has given us the gain of 15,000, chargeable gain. Remember, this is a company. Corporations don't pay CGT. Corporations pay corporation tax on the chargeable gain. So chargeable gain was 15,000. Chargeable gain is one source of taxable total profit. That's the first one. So we have first recorded the chargeable gain. That's the first one. That has been recorded. I've recorded under the taxable total profit 15. That's done. That's how simple. I'm doing them in thousands. Then I move on to the next. Again, these two items are related. The next two items here is much easier if I use a pen. These two items, note number 2 and note number 3, these are related to the trading profit, but except for one item, you can see they have given us the charitable donations being given 3,000 and 4,000. Right, the last item, charitable donations, is given 3,000 and 4,000. That means altogether 7,000 is a charitable donations. QCDs, in a short form, we call them QCDs, charitable qualifying charitable donations. But the issue with these QCDs, right? These are not allowable expenses. So they're saying in this note 3, right, as part of the sundry expense that we have here, right, as part of the sundry expense we have here within the administrative expense, charitable donation also has been deducted. But it was wrong to be part of the trading expense because we show charitable donations separately. Right, from your total profit, we deduct the charitable donations. So I said to you, it is 7,000. So let me put this here. So we are just trying to record the items that easy for us to, as a make a start, right? So charitable donations, how we gonna find the charitable donations? See here, minus 3,000 and minus 4,000, which is minus 7,000. These are the two charitable donations. We do have to do another adjustments related to trading profit, but we are just simply recording the item that need to be there in the taxable total profit. You can score the easy marks like that, right? So I first recorded the chargeable gain, then I recorded the charitable donation that need to be deducted. It is an allowable, right? Now moving on to the next item. Here now they're saying income from investment. So in my profit and loss account, I have an income from investments, which is 30, right? So they're saying this income that we have, that we receive from investment, 30,000, it is simply because of you have got a rental income from building. So when you say it is a rental income that you are receiving, that shows what we have here is the property business profit or property business income, right? So how much we have, that 30,000 should be shown as a property income or property business income or property profit. 30,000 being recorded there. That's also done. Then move on to the next item. They have given us an interest income comprises the following. Now, the issue with this particular example, right, in terms of the interest income, that this interest income has not been shown in the profit and loss account. We don't find that in the profit and loss account, right? This 30 is the investment property. We have done it. This 30 was the operating profit. We will be doing it later. But this interest income of 30 was not there. Now the question, when you deal with interest income, we said interest income are two types. One is trade related. Then the other one is a non-trade related, non-trade loan relationship, right? The other one, first one, trade related. If it was trade related, I should have had this as part of my working here, operating profit, trade profit, right? If it is non-trade related, that should come under as a separate line as an interest income from non-trade loan relationship. See here, NTLR, non-trade loan relationship, right? So here they are saying these interests that we have as an interest income, 30,000, but when you look at it, getting it, you took a loan interest receivable and then the bank interest, those are non-trade relationship, not trade, right? So these are non-trade relationship. Oh, wow. Right. So these are non-trade relationship that we have, right? So I need to record this 30,000 as a non-trade relationship loan. I'm receiving it, so it has to be a positive number, right? I'm receiving it, so I would have it as a positive number as a non-trade loan relationship. So I have recorded, you see here now, out of the taxable total profit, you see how quickly, how easily we are scoring the marks. So property income 30, non-trade loan relationship interest income 30, chargeable income is also 30, QCD is also well recorded. We need to find now the trading profit. How can we find the trading profit? For finding the trading profit is where the examiner, we learned that if he wants to find the trading profit, we would start from the operating profit. And then we try to operating profit is the accounting profit. And then we try to convert this accounting profit, because accounting profit would have not only trade profits, it would have all the other profits. It would not only have trading profit, it would have all the other profit, right? So by using the accounting profit, we need to find out what would be the trading profit. That's the idea behind it, right? So we just need to find out what would be the accounting profit, difference between the accounting and the trading profit, taxable trading profit, right? So it has to be based on tax rules. So what I need to do now, when you start the working to find the trading profit, we would start from the operating profit. Now this is the first step, right? It used to be net profit before tax, but now we start from the operating profit. This is what everything would be started, right? So we start from the operating profit, and this is where we would start. I started from operating profit. Now I need to convert this to find trading profit. Now my next step here would be, and I need to find out, now if I just look at this here one by one, I need to work with the notes first, and to see whether are there any adjustments need to be done with respect to this accounting profit. I need to convert this accounting profit into trade profit, because some expenses they have deducted may not be allowed according to the tax rules. Some income they have included may not be trade related, that need to be deducted. Right, now let's take the first one. There now the first notes is about this 30,000 other operating income. They're saying other operating income of 30,000 represents a profit on disposal of a factory. Now, when I took this operating profit in my working, I assume this is to be my trading profit, right? Then it can be recorded in my taxable total profit computations. But now I've been told, the first note, I've been told, listen, this 30 is not trade related. You have added it, but it is not trade related. It is related because you sold a factory, because you disposed a factory. That's where you got 30,000. Trade means profit that you get from main business activities. So selling factories is not your main business activity, not Catherine's in these examples, business activities, right? Therefore, what we're supposed to do, this can't be trade related. It was a profit you added. This was added with the 148. Now we are saying it can't be there, so we need to reverse it. So if it was added before, we need to remove it, right? So that's the first workings that we would do, right? So we did the first adjustments. Disposal of profit, it is a capital item. It is not part of the main business activity, so we need to remove that 30. That is being done, right? And now the next item, they talk about these total expenses, right? Administrative expenses. They're talking about this line, right? So they have given us the breakdown. Remember, for expenses, any expenses that is wholly and exclusively for trade purposes is allowable. If you suffer heat and lighting to run the trading, it is allowable. If you suffer wages, it is an allowable expense. When you give accounting fees for your accountant, is an allowable expense. Sundry expense 42. We don't know what are sundry. Sundry means miscellaneous expenses. We still don't know the breakdown of it. The breakdown is being given in the next line, right? Now they're saying, right, if you just quickly see sundry expenses, you can add these up. 20 and 15 is 35, 35 and 7, 42. That's the breakdown of this 40. Now they have given us the breakdown of these sundry expenses. So they have told us, staff, out of this 42, 20,000 belongs to staff entertaining cost. 15,000 belongs to client entertaining cost. Now you need to know these are tax rules, right? We know staff, you can't entertain, staff entertainment cost is not allowed. So you can't deduct this. But client entertainment, yes, you can, sorry, it's the other way around, right? So the first one here, for staff entertainment, you can entertain your staff, right? But for the client entertainment, you cannot entertain your client. Staff, yes, client, no. So it was okay to deduct 20,000. So this 20 out of this 42, we have that 20,000 included there. So that was correct, right? There was no problem having that 20,000 and deducting it. But we have already deducted this 15,000 because that is part of this 222, right? Because here, if I just scroll back again up, this 222 was deducted, then this profit was arrived, right? So, but we are now saying out of this 42, 15,000 is client entertaining costs. You took your client to a restaurant for a meal. That is disallowed expenditures for trade purposes. So if it is anything disallowed, you need to add back, right? Because you can't deduct it. So you need to add back that client entertainment cost. So you would be adding back client entertainment cost. Why did we add this back? Why we add the client expense back? Because the client expenses here within this 222,000, it was deducted as an expense in the accounting books. We are now applying the tax rules. Tax rules would not allow client entertainment cost. It is disallowed. Now the next item is qualifying charitable donations, total of 7,000. We know where it need to go. So basically we are saying now it is within this 42. That means it is within this 222 and we have deducted it before. Now we know qualifying charitable donations need to go somewhere else in this main computations table. It is not part of your trading expenses. So it was wrong to deduct as part of 222. So we have to reverse it. That means we have to add back the qualifying charitable donations. So qualifying charitable donations also we need to add back, right? We know why this 7,000 is. Then that's the note number 2. And we have done note number 3. In income from investments, they're talking about this in income from this investments, this 30,000, right? Because we took the operating profit and we started with this figure, right? So this 30,000 is below that figure, so it would not impact your trading working, right? It would not impact your trading profit working because our trading profit started from here. So anything that impacting this number is where it's going to appear here, right? Now we were told we have an investment income. We have recorded it. We said it was a property income and we have recorded it at the right place. Remember this 30,000, we have recorded it as a property income. That's fine. So the next item here, we also recorded the non-trade loan relationship. Now let's come back to this item. Now, if you read this carefully, we've been told this is interest payable 30,000. So this is interest payable, this 30,000, it relates to this 30,000, right? So this 30,000 relates to loan notes issued to finance the company's trading activities. So this is a loan, right? So this is a loan, but this loan is a trade related loan. It is a trade related loan, right? Trade relationship, right? Trade related loan. Anything interest that you're going to pay for the trade related loans would need to be there as part of your trading profit, right? So this 30,000 was deducted below here, but then you also need to deduct from the operating profit, right? 30,000, because your profit need to be deducted now, right? Profit need to be deducted because it's your trading profit, right? As part of your trading profit, your profit will be deducted from there because your trading profit, and so the amount of the profit that you would deduct would be 30,000 as a trading profit that you've deducted, right? 30,000 has been deducted from there. That is done, and you have recorded that as well. So the final amount here is the capital allowances. Capital allowances are allowable expenses, right? So it is a tax depreciation is what is capital allowances means, right? So when the tax authorities give us capital allowances, right, they would not allow us with the accounting depreciation. So you can see from here, we have deducted the accounting depreciation as 125. Accounting depreciation is not allowed. It is a disallowed expenditure for tax purposes. So we need to reverse it. We have deducted it. It is not allowed. So we need to reverse it. So we need to add back the accounting depreciation. So that we have added back the accounting depreciation here. Right. So we have added back the accounting depreciation. So we have done that too. So because we have added the accounting depreciations, we need to deduct the tax depreciation, which is an allowable expenses as capital allowances. Right. Tax depreciations, allowable expenses. Now we can see once you arrive at this figure, once we arrive at this figure, we get the total of this. Right? The total of this is what is known as our, right, 148 minus 30, 125, 15 and 7. This is known and minus 30. Adjusted trading profit before capital allowances, right? You see adjusted trading profit, but this is before capital allowances, right? Now we need to deduct the capital allowances. Capital allowances we were given as 35. Capital allowances, the tax depreciation is minus 35,000. We deducted it. So from your, once you deduct your capital allowances, the amount that you would have now, 235 minus 35, 200,000. It is your trading profit. Now we have completed the trading profit. So this trading profit figure now would appear on our computations for taxable trading profit. So taxable total profit. So this is the trading profit source, 200,000. So now we have the trading profit calculated and recorded in our computations table, taxable total profits. Now we have all the sources of income. So trading profit, property income, non-trade loan relationship, chargeable gain. You add everything up and that would be known as your total profit. From your total profit of 275, you minus the 7, which is your qualifying charitable donations, you get the taxable total profit. That's simple as this, right? So very simple steps, right? Performing this question, finding the taxable total profit. There are workings there. I've done these workings. You can simply explain the workings one by one, right? So here, the only question that you just need to remember, right? Here, the only questions that you just need to remember in this example, right? The only one that you need to remember, this interest income. Note 5. This interest income is not part of these expenses. It is not being part of this profit and loss account. So it is not being recorded within it, but then we would consider accrual. So it need to be as part of the, it need to appear, and it is not being recorded in the profit and loss account, but it is missed in the profit and loss account, but we would record them under non-trade loan relationship income. I hope that's clear. Calculate, the question asks us to calculate the taxable total profit, right? So you would also can show workings written one by one and performing it, right? Thank you.